locked, but clarity again is key. We get that Bitcoin flush to, let's say, 27,000 that I've been talking about. Maybe that's going to be a major trend line. I kind of am eyeing Cardano. Now, Cardano right now is putting in a bear flag, which is fine by me because I'm not long Cardano. But what I do like is this trend line. See this parallel here that goes down, and we broke above it here, but then broke below, then we broke back above. This trend line should be good support again, and that's right around 27 cents. So again, a quick flush.
One of the things that you're pointing out on your chart that I think to me is pretty remarkable is that you could argue that if the government wasn't hiring insanely, right, you know, basically everything else is shrinking really quickly. But here we have the government, which we know the U.S. debt is 32.5 trillion, is hiring left and right and every which way. And in fact, I know there's bond sales, like there's literally a trillion in bond sales that between, I think, a few weeks ago and the end of the year will be going off as well. And so it's almost like you have the Federal Reserve shrinking their balance sheet, but then the government is jacking their balance sheet up to offset that. And it's just, you know, something that people kind of should realize is that, you know, it may not, overall, the economy may not be as strong, even though the jobs numbers are strong because of the U.S. government hiring. You know, so one of the things I'm looking at here is this is the 10-year yield. And I think the big thing for me is just remembering that this high in the 10-year when we hit 4.3, that coincided with the October low. So as soon as yields put in that high, we started to get the rally that we've seen basically nonstop. This high pivot over here coincided with the banks failing, Silicon Valley Bank. And so you wonder, as you push up, does something new break, or does the stock market finally start to kind of re-accelerate back to the downside to play catch up? And the other thing to just point out is I have a longer term trend line where I think the 10-year is likely headed. We can see it right here sloping up through all of these highs, right? All of these highs, and it's right around 4.5%. So you know, one of the things I'm trying to game out for the markets is, well, how high could the 10-year go? Because I do think the higher the 10-year goes, the more pressure there will be, not only on the economy, but on the stock market as well. And it's looking to me like you might have a 4.5 handle in the not too distant future on the 10-year yield. There's always a breaking point, right, for everything. And I think that's the question is, where do yields have to go? I know Bill Ackman, you know, he's a big hedge fund manager. He's shorting short-term bonds because he thinks those are too high, but he's thinking long-term. He's buying long-term yields or bonds. Well, he's shorting long-term because he thinks yields are going to continue up to play catch-up to the short-term, essentially. So it's just interesting to kind of look at what's now starting to form, and I'm hearing more, and this is something I've been talking about for a long time, is that I've always thought that inflation is going to remain sticky around 3%, and we're now starting to hear some of these bigger players, like a Bill Ackman, starting to say, yeah, this is likely what's going to happen, is you'll have this inflation number come back down, but it's going to be so hard to get it back below because of all these underlying factors, and even the Fed printing and lowering rates. I mean, if you're only at 3% and the economy goes into recession, is the Fed not going to lower rates? Or what are they going to do here? And especially if things start to break, they're going to have to react and do something most likely.
Based on Coin's recent Digital Asset Fund Flows Weekly report, investors in digital asset investment products have witnessed significant outflows this week, totaling $107 million. This is attributed to a surge in profit-taking as momentum builds amid the prevailing summer lull. Trading volumes for these investment products are 36% below the year-to-date average, while broader exchange market volumes have experienced a more substantial decline of 62% compared to the average. Market activity remains subdued, reflecting the report's observations. Dara provides a cryptocurrency update, with a focus on altcoins and the anticipated next level of growth he envisions for them. Now, let's return to the video.
You know, whether it's, I don't know if it's Polygon, I don't know if it's Solana or Cardano or Polkadot, but I do think that if you start putting them in a security, even if they're put in the, okay, these are securities, then you have to start reevaluating them based on, okay, well, what's their value in that structure? Do they create earnings, or how many networks or things are built on that specific network? And I think that's where you start to come up with saying, okay, well, if we just get a little bit more clarity from the SEC, you could actually see some decent ability to value. And I think that's been one of the major issues that I've had, is that there's no transparency for a lot of this stuff. And so I find it very hard as a stock person or a commodity person to say, okay, this is what it should be trading. We've got to give it a multiple. What's the multiple? Because in the stock world, it's okay, Apple is this type of stock, so it gets a multiple of 20 or 30 based on earnings. For altcoins, you can't really do that, but there's got to be some metric we can use. And I do think that there is some value here that will be unlocked, but clarity again is key. We get that Bitcoin flush to, let's say, 27,000 that I've been talking about. Maybe that's going to be a major trend line. I kind of am eyeing Cardano. Now, Cardano right now is putting in a bear flag, which is fine by me because I'm not long Cardano. But what I do like is this trend line. See this parallel here that goes down, and we broke above it here, but then broke below, then we broke back above. This trend line should be good support again, and that's right around 27 cents. So again, a quick flush into that, I'd be a buyer. Not as a long-term investment yet. I'm not confident enough in that, but just as some sort of buy there. And then, looking at Solana's trying to break this support here. And then see this kind of coordinated, you have this downsloping trend line from pivot to pivot, and we broke out. And then this upsloping one, look at how they're meeting right there. Now, this is still a fair way away, but 1650, I love when two lines converge because it's like one line is support. If you get two lines together, it's like double the support, and it gives you more confidence as an investor or trader. So I think those are two that I'm kind of keeping an eye on if they dump out a little bit. Lastly, I'll mention XRP, because XRP is actually getting closer to this previous pivot high from the last consolidation, and it's right around 58.5 cents. And I wouldn't say, go all in there. You should never go all in. But I would start to accumulate a little bit around 58 cents and then slowly buy as it comes down to some of these secondary levels. So again, the beauty of being a swing trader is that there's always something to either enter or exit. It gives you more possibility for action. I want to just quickly look at the Ethereum chart just because you do see the same sort of trend line as Bitcoin has. And it's kind of interesting because all of these charts, they're semi kind of connected, and we really see the connection with Bitcoin and Ethereum, where this trend line is almost identical on the Bitcoin chart. And you can see that we are, same thing, kind of getting closer and closer to that level. And to be honest, so I have a short out in Verified Investing Crypto, the service, and we're in the money. We're short from up here. The concept is, do I go long at the line, or do I just cover? And I've been dealing with that myself on a trading basis. And right now, I think I would cover the short there because there is a chance of a bounce, but I'm not confident based on this chart of it not breaking down. And so I don't think I would flip it into a long. So covering a short is one thing, flipping it from being short into a long is another thing. And just a little technical analysis here is what you'll see is the more you hit a trend line, the weaker the trend line becomes. And the concept behind this is, think about a door, right? Your door to your house is locked. Your cat's inside, your house is on fire, right? And you really want to break it down, or your dog's inside, whatever animal you want to put in there. You ram that door once, probably doesn't break down. You ram it twice, maybe 3 times. At some point, the force you're exuding on that door is going to make it cascade and break down. And so think about this as your doorway. And the more you hit it over and over again, eventually you hit it enough, it's going to break. And that's kind of why I'm not ready to go long Ethereum at this line. But I would say, okay, well, there's still a chance of a